Hello there, I hope that you are doing well. Welcome to episode 17 of the Zeussy Public 2025 Mentorship here on YouTube. During this lecture, I will be providing a market review based around the tariff chaos which has been going on in the world economy over these past couple of weeks. If you haven't been sleeping under a rock, you will have noticed that there has been a lot of volatility on the markets, and this is all a result of the tariff chaos which is currently going on in the world. Here on the daily chart of NASDAQ, and what I would like you to see is that NASDAQ opened up the month of April and immediately expanded towards the downside heavily. Notice that when we saw this expansion lower taking place, we saw the market reach higher time frame sales liquidity pool objectives. If you zoom out on the NASDAQ chart and you scroll to the left, you'll be able to see these higher time frame objectives. After this quick repricing lower occurred, we saw the market form this quick reversal and the market repriced towards the upside. When I say reversal, I'm not saying that the low of the year is in. I'm simply saying that we saw a change in the state of delivery where the market changed from sell program to buy program. And the reason why this occurred was due to the following. You can see that this very large up-close candle formed right here on NASDAQ, and what happened here is that Trump announced that he would delay the tariffs which he has put on a lot of countries by 90 days. Now, when such a very large range gets established, you can immediately anticipate smaller ranges to follow afterwards. But next to that, what you can anticipate is that whenever we see quick repricing lower, followed by quick repricing higher, that's a warning sign for high resistance liquidity runs to take place soon, aka consolidation. When you pay attention to the delivery which has occurred throughout these past few weeks, you can see that NASDAQ has simply been consolidating, where you can see that the market has been initially consolidating, where we were engineering buy side liquidity above these highs and sell side liquidity below these lows. Notice that when we opened up for this week, we saw the market open up, drop lower, taking out the previous week's low, taking out this sales liquidity pool objective, and we then saw the market eventually form a new low before reversing and drawing towards the upside. Notice that the market was drawn now towards the opposing side of liquidity. Where we took out sell side liquidity, you can see that the market was then drawn towards buy side liquidity, resting above the previous week's high. Notice, however, that the SMT detector is signaling that there is weak SMT relative to ES right here, meaning ES took out the previous week's high and reached its objective whilst NASDAQ didn't yet, and that's something to monitor moving forward. When we pay attention to the RE chart then, what I would like you to see is that when we pay attention to the delivery which has occurred throughout these past 2 weeks, what you can see is that the markets have simply been stuck inside of a range. The range that we have been stuck in is the following. When you pay attention to what happened after we expanded higher significantly on this Wednesday right here, you can see that the market retraced and you can see that the market was simply going sideways. It was simply stuck between this low right here and the previous week's high, which is this buy side liquidity pool. Do you see how the market ran up higher very slowly and how it ran towards the downside also very slowly? This is interesting to note, but we'll get to that in a bit. When we pay attention to what occurred last week is that we can see that this very large new week opening gap formed right here. This whole green box is our new week opening gap. Notice that we saw the market consolidate inside of that, and then eventually on Tuesday we saw the market gap away from it, meaning we saw the market displaced towards the downside and this gap got created. Notice that we saw the market retrace into that gap, and this is where shorting opportunities presented itself from on Wednesday, and it would confirm to us that we would likely see sales liquidity pool objectives being the draw. Meaning, this gap right here was my reference point throughout the past week to anticipate that we would likely draw towards sales liquidity. The reason why this gap in particular is important is because it got created whilst we left this new week opening gap. Notice that we saw the market expand towards the downside and it reached this specific red shaded box. Now, during this lecture, I'm not going to share with you what this red shaded box is. However, I'm going to give you a homework assignment. And what I would like you to do is I would like you to put this range on your chart, on NASDAQ, on the RE chart, and I would like you to scroll to the left and I would like you to monitor what you can see on that RE chart. And I'm going to give you a tip. If you understand mitigation box and breakers, you should be able to see it. What I would like to see is that we retrace from this red shaded box and we eventually see the market expand towards the downside. Notice that the new week opens up and we see this new week opening gap getting created. Eventually we see the market expand towards the downside and notice that the market takes out the previous week's low. The moment that both NASDAQ and ES took out the previous week's low, it was to me the sign that we would likely draw towards the sell-side liquidity pool of this Thursday low. Notice that we saw the market expand towards the downside heavily and quickly on Monday and multiple imbalances got created right here. Now, when we pay attention to what happened throughout the later part of Monday, you can see that we had a sharp reversal taking place right here. Do you see how this very large BC, this bullish for value gap, gets created? The market retraces into that bullish for value gap and we then see the market expand towards the upside again. Do you see how a new bullish for value gap gets created right here? The market retraces into that bullish for value gap and it expands higher again. And a new bullish for value gap gets created. So let me just summarize. What we saw taking place was that the market expanded towards the downside, taking out sell-side liquidity, resting below those relatively equal lows. What relatively equal lows? Well, we had relatively equal lows in this area right here. And when you pay attention to where the previous week's low formed, you can see that it was also in close proximity to this sell-side liquidity pool. And therefore, the moment that we see the market take out those lows and we're anticipating a consolidating market environment, we are monitoring whether or not we are going to form a new low to drop back into the range. And that is how we trade consolidating markets, where we anticipate that every single run lower is likely going to be manipulation, just like every single run higher. So what I was outlining to my private mentorship students throughout this whole repricing lower was that, okay, be cautious because something feels off right here. This feels very manipulative. Then on Tuesday, I outlined that the moment that we would displace above this sequence of imbalances, utilize that as support on price, that confirms to me, yes, we're in a buy program. However, what even confirmed it more was when we saw this expansion leg higher originating from this blue shaded box. Because think about it, right? What did I tell you about institutional order flow throughout this public mentorship? I outlined to you that we can utilize arrays to gauge order flow, specifically fair value gaps. You can see that every single expansion higher was followed by a retracement lower, was followed by an expansion higher. And this process kept on continuing itself until ES reached the objective of the previous week's high. Therefore, what I'm looking for is I'm continuously looking for buying opportunities until those higher time frame objectives get met. What I would like to see is that we see a BC get created the moment that price expands throughout the weekly open, but also throughout that red shaded box, which I had outlined prior. Again, go into your own charts and investigate what that red shaded box is. What you can see is that the market expanded above the new week opening gap and we saw the market retrace into that red shaded box and into this REBC. Notice that we form a low here and we eventually reprice higher. Do you see how we then had this gap higher getting created? This gap higher got created due to announcements which were made post-market with regards to the tariffs again. This is the whole narrative that they're working with, by the way. Tariffs, 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 tariffs. And that is something which you must understand. And therefore you can anticipate that every single news event which is being thrown out there right now is all going to be utilized for manual intervention. And that is what you're seeing right here. Notice that we see the market reprice higher and it reached this gap which we're monitoring the week prior. We see the market retrace from that gap and we see the market retrace into that new gap which got created. Notice that the market forms a low there and then we open up for Wednesday and the market immediately begins to expand towards the upside. Do you see how the market reprices above that gap of last week and how we open low for this 9 o'clock RE candle back into that same gaps range? Guys, what I want you to see is that shorting opportunities presented itself from this gap when the market displaced towards the downside, retraced higher and then expanded lower. However, the moment that we displace through that same gap, we can utilize that gap as a point of interest on the right side of the curve. Therefore, today on Wednesday, I went long from that same gap, which I have been monitoring ever since last week. And that's a very important insight which I would like to share with you, because it shows to you that there are algorithmic reference points that IPDA will seek to refer to. Notice that we see the market expand towards the upside, and we see it draw in very close proximity towards the previous week's high, but notice that the market stops right in advance of it. The market takes out this price liquidity pool, but eventually we see the market change from buy program to sell program intraday, and we see the market reprice back towards the lower end of that gap. Now, the reason why this occurred was due to the fact that ES already reached its objective, as you can see right here. Next to that, a smaller S&P percent itself, which you can investigate right here. All in all, I would like you to understand that throughout these past 3 days, because it's simply just Wednesday with 2 more trading days to go in the week, there were plenty of opportunities. Meaning, on Monday, shorting opportunities presented itself into our sales liquidity pool objectives. Then from Tuesday on, buying opportunities presented itself, going into the moment that ES reached its previous week's high. Now, moving forward for NASDAQ, what we will be monitoring is the following. What we will be monitoring is the reaction to this gap. I'm going to be extending that to the right. As long as NASDAQ does not displace below this gap, I would favor a run towards buy side liquidity, and I would anticipate that NASDAQ is likely going to catch up to ES10. However, the moment that NASDAQ would displace below this gap, utilize this resistance price. From that moment in time, I would anticipate that we would likely see the market begin to draw back towards this gap which got created right here, since we only tapped into the higher end of it right here. If you compare NASDAQ to ES relative to intermarket relationship, pay attention to what happened specifically right here. When we pay attention to the daily chart of ES10, what I would like to see is that on ES the exact same story applied as on NASDAQ. Meaning, what you can see is that throughout the beginning of the month, we saw the market expand towards the downside heavily, and we saw it reach the 5,000 big figure right here. Notice that we saw the market then form a sharp reversal right here, and we changed from sell program to buy program for the near term. Notice that we saw this very large green candle form, and after this large green candle, we saw the market simply just consolidate, where it has been going back and forth, back and forth, back and forth. The reason why this occurred was again due to the same reasons as I outlined them on NASDAQ. And the reason why I'm putting emphasis on this is because I want you to understand that what I'm sharing with you here is fractal. Meaning you can look for the same logic to be applied intraday, so meaning throughout the day, to anticipate when we're likely going to see consolidations and when we're likely going to see higher resistance liquidity runs. Because that is one of the characteristics that is present whenever the higher time frames look like this, where there is all of the sudden manual intervention which is taking place, which gets followed by this very ugly price action. And therefore you must become very good at recognizing it to save mental capital. Now, as you can see, ES opened up this week and we saw the market take out those sales liquidity pool objectives of the previous week's low and this sales liquidity pool right here. And notice that we then saw the market reverse and draw towards the previous week's high, and notice that we formed weekly SMT there with NASDAQ. Does that SMT mean we're going to reverse and going to draw all the way down to sales liquidity? No. Not necessarily, and therefore I would like you to understand that until we see NASDAQ and ES begin displacing lower, we are still in a buy program. Buy liquidity is resting above this high right here. Pay attention to the door in particular. What I would like to see is that what I will be monitoring for the door is whether or not we are going to see the door manage to get above this upclose candle. If the door is going to manage to get above this upclose candle, preferably with a BC, with a bullish value gap creation, that is when I anticipate, okay, I want to see this upclose candle function as support and price, because if this upclose candle functions as support and price, I anticipate that the door is likely going to reprice towards the new week opening gap, and then this would be the range which I would look to engage in. Now, it's very important to understand that you have just seen my analysis for the door, which I outlined on Tuesday, the 22nd of April 2025. What I outlined throughout my market review for my private mentorship students was the following. What I outlined was that I was monitoring for the door the reaction to this specific upclose candle right here. The reason why I was monitoring this specific upclose candle right here was due to the fact that this was my market structure shift pattern which was being set up. where I can see that the market expanded towards the downside heavily from the moment that we opened up this week, and we saw the market reach our higher time frame objective of a monthly imbalance. Notice that throughout this repricing lower, this CB got created right here. Notice that the market spent some time inside of that CB, and eventually this large upclose candle formed. Notice that the market then had a sudden drop towards the downside, but notice that the market did not make a lower low. This is important for intermarket relationship purposes. We then saw the market reprice towards the upside, and what I was waiting for was the following. I was waiting for an imbalance to form, a bullish value gap in particular, whilst the market repriced above this high. And the reason why was because that would signal to me that the dollar would then be in the buy program. The moment that that buy program would get confirmed, I would anticipate that the dollar would likely expand towards the new week opening gap, which is plotted right here. Notice that we saw the market beautifully find support inside this upclose candle once we traded above it, and we created a small little inefficiency right here if you look closely. We saw the market expand higher from there, and the market repriced above the new week opening gap. Now, when it comes to this new week opening gap, what I would like you to see is that we expanded through it and we created this large imbalance. We saw the market retrace into that imbalance, and notice how the market found support inside of that imbalance and how that set up a new expansion higher, drawing towards the week's prior new week opening gap. All in all, for the dollar, direction to this new week opening gap right here will be very telling. If we reject this new week opening gap, we might want to retrace into the current week new week opening gap. If we displace above it, utilize the support on price, then buy side liquidity resting above this high comes to mind as a draw in liquidity. And when we pay attention to euro as well, what I would like to see is that euro repriced into the higher end of that imbalance, which I had outlined throughout my market review yesterday. And do you see how we wicked above it, but how the bodies kept on closing inside of it? The wicks do the damage, the bodies tell the story. Notice that when we pay attention to euro, what you can see is that the market consolidated for a while throughout the last week, and then on Friday we began expanding towards the upside, but then when the weekly open took place, that's when it really kicked off, because you can see that euro repriced higher significantly. Notice that the market is now consolidating and chopping around. What I will be monitoring is the reaction to this imbalance right here. Do you see how that imbalance displaced through that buy side liquidity pool, which we had as an objective? If we displace below this imbalance, begin to utilize this resistance price, that's when I anticipate that euro is likely going to drop back towards the weekly open right here. You have just seen my market review for euro, which I released on the 22nd of April on Tuesday. What you saw me outline throughout that market review was that I was looking for euro to show the signs of wanting to roll over towards the downside. The reason why I had anticipated so was due to the following. When we pay attention to the delivery which occurred on euro throughout the latter part of last week, what you can see is that the market consolidated right here. We then saw the market begin expanding towards the upside on Friday, and when we opened up for the new week, we saw this very quick repricing higher taking place. We saw euro reach our higher time frame objectives of a specific old high and the price range of a daily CB, which was just above that old high. And notice that we saw the market consolidate inside of that range. What I had outlined was the following. The moment that euro would displace below this RE imbalance, which formed when we repriced into that larger daily CB, I would anticipate that we would utilize this imbalance as resistance price to reprice towards the downside. That was my top process for euro. And what I would like you to see is that when we opened up on Tuesday, we saw the market open up, run higher, and then we saw the market displace lower. Do you see how this CB got created? The market retraces into that CB, and we then saw the market expand below that blue shaded box. Do you see that we retrace into that imbalance, into that blue shaded box, find resistance there, and immediately begin expanding towards the downside, drawing towards the weekly open? This right here shows to you why it is so important to know what algorithmic reference points IPTA is going to refer to. Because the moment that we displaced below this RE imbalance, whilst the dollar showed to us those bullish signatures that we were anticipating to take place, that's the confirmation that the dollar is likely going to reprice higher, whilst euro is likely going to reprice lower. And isn't this beautiful to see how the bodies kept on closing below this BC's range? That right there shows you that the wicks do the damage, but the bodies tell the story. We saw the market expand towards the downside and we saw it reach the weekly open. It even got more oversells and the market reached the sales liquidity pool of these relative weak lows. Now moving forward for Euro, I'm not really anticipating much, and the reason why is because our objectives have been met, and the same of course applies to the dollar. If we are going to see the signs become present of the market continuing expanding towards the downside, then sales liquidity resting below the Tuesday low comes to mind as a draw liquidity. If Euro is simply going to consolidate throughout the end of the week, I really wouldn't be surprised by that. And the reason why is because we have seen massive price swings taking place for both Euro, GU, but also for the dollar. And therefore, I wouldn't be surprised that the job is now done, so to say. This was the most logical move for the week, and this was quite frankly the only swing opportunity, in my opinion, for Euro. With that being said, this market review comes to an end. I hope that you found it insightful. Please let me know if you would like to see more lectures like these in which I walk you through my thought process on the markets. And if you enjoyed this lecture, let me know, and I want to wish you good luck the upcoming week with your studies. Be safe.